Korean Economic News Briefing, April 21, 2026. Good morning. Here is today's Korean Economic News Briefing. We begin with significant developments on the export front as the government intensifies its efforts to support exporters amid global uncertainties. Deputy Minister of Economy and Finance Lee Hung-il, who also heads the newly established Export Plus Support Task Force, conducted his first field visit to the Seoul Digital National Industrial Complex to directly listen to business concerns and accelerate policy implementation. The government is moving swiftly to execute supplementary budget projects, including export vouchers and financial support programs, while establishing mechanisms to resolve corporate grievances on the same day through relevant agencies. This marks a critical shift in government policy, recognizing that the Middle East conflict and volatile oil prices are creating substantial headwinds for Korean exporters. The administration is positioning field-based support as its primary response strategy. The task force will focus on 5 key initiatives: customized support tailored to each industry, establishing a virtuous cycle in export financing, fostering regional enterprises, and maintaining constant cooperation channels with the business community. Simultaneously, the government is preparing for next year's fiscal planning with heightened awareness of external uncertainties. The Planning and Budget Commission and the Ministry of Economy and Finance held their first official joint meeting since their recent restructuring and examined economic conditions and tax revenue prospects for 2027. Officials from both institutions acknowledged that the shock from high oil prices and global energy instability could extend well into next year. This discussion reveals a crucial strategic decision. Despite concerns about rising national debt ratios, the government is committed to maintaining an active fiscal stance to support economic growth. Planning and Budget Minister Park Hong-jun addressed recent IMF warnings about Korea's debt to GDP ratio rising from 54.4% this year to 60.1% by 2029, emphasizing that the nation possesses sufficient capacity to service its debt and pointing to examples like Sweden and the Netherlands, which reduced debt ratios by expanding their GDP. On the monetary policy front, newly inaugurated Bank of Korea Governor Shin Yun-song took office today, inheriting the challenging task of balancing price stability with financial stability amid inflationary pressures and economic uncertainty. Governor Shin pledged to operate monetary policy with careful deliberation and flexibility, signaling that the central bank will maintain a cautious approach given the complex global environment. Market analysts widely expect the Bank of Korea to hold interest rates steady, particularly given that semiconductor export strength is supporting overall economic growth, though inflation pressures remain a concern. Meanwhile, in the United States, the confirmation process for Federal Reserve Chair nominee Kevin Warsh faced procedural complications, with Warsh arguing that presidential comments on monetary policy do not threaten central bank independence, a position that drew attention given the Trump administration's pressure for rate cuts. This global monetary policy uncertainty adds another layer of complexity to Korean policymakers' decision-making process. The stock market showed robust performance today, with the Korean Composite Stock Price Index surging 169.38 points or 2.72% to close at 6,388.47, approaching the 6,400 level that markets have been targeting. Meanwhile, the $1 exchange rate strengthened, closing at 1,468 won and 50 jeon per dollar. This strength in equity markets reflects investor optimism about semiconductor sector prospects and anticipation of potential geopolitical developments. New exchange-traded funds continue to enter the market, including mixed-type products combining blue-chip semiconductor stocks with short-term bonds, as asset managers seek to capture diversification opportunities in the current environment. Turning to industrial cooperation, President Lee Jae-myung's state visit to India has catalyzed substantial business engagement between Korean and Indian companies. During a business forum in New Delhi, Korean and Indian firms signed 20 memoranda of understanding spanning shipbuilding, steel, digital services, and energy sectors, with export contracts valued at $48 million in medical devices and consumer goods. Most notably, Hyundai Motor Company and TVS Motor Company formalized a joint development agreement for 3-wheeled electric vehicles optimized for Indian market conditions, fulfilling a commitment made 8 years ago between Hyundai chairman Chung Yoo-sun and Prime Minister Narendra Modi. HD Hyundai is also advancing plans for a domestic shipyard in India, now elevated from local government to central government level. These developments represent a strategic pivot toward deepening manufacturing cooperation with India, a nation of 1.4 billion people with substantial cost advantages and technical capabilities. In the battery and renewable energy sectors, Battery Solutions, a subsidiary of KEPS Biopharma, has signed an annual contract with BYD, the world's leading electric vehicle manufacturer, for lithium iron phosphate battery recycling, securing a foothold in what industry analysts estimate as a 20 trillion won market opportunity. Additionally, Naver has invested 30% equity stake in a wind power facility operated by GS Wind Power, making it the first RE100 member company to directly invest in renewable energy generation. This strategic move underscores Naver's commitment to powering its energy-intensive AI data centers with clean energy, addressing long-standing criticism about the environmental impact of tech infrastructure. In the real estate sector, the Korea Land and Housing Corporation announced it will accept applications for 4,200 units of its rental housing program, Daedaeun Dune Housing, beginning next month. This Jaeon's-type rental program targets newborn households, multi-child families, and newly married couples, allowing residents to occupy non-apartment housing such as villas and multifamily units for up to 8 years without income or asset restrictions. Concurrently, Korea's rental market is experiencing structural shifts as landlords convert traditional Jaeon's deposits into monthly rental or semi-Jaeon's arrangements, driven by increased property tax burdens from rising assessed values and persistent interest rate uncertainty. This trend is shrinking Jaeon's inventory and constraining tenant demand, raising concerns about market stability. Technology partnerships with India are extending to the digital realm as well. Naver has signed a strategic partnership memorandum with Tata Consultancy Services, India's largest IT services company, to collaborate on artificial intelligence, cloud computing, and business-to-consumer services. This collaboration leverages India's abundant software talent pool, estimated at 14 million skilled technology professionals, positioning both companies to develop India-specific AI and cloud solutions. Furthermore, KT Cloud has obtained cloud security authentication for its AI Foundry platform and launched a public cloud version, enabling government agencies and local authorities to access enterprise-grade AI services previously available only to private sector clients. Korea Aerospace Industries is strengthening its supplier ecosystem by allocating 30 billion won to support equipment investments by cooperating companies, reinforcing the principle of shared prosperity within the aerospace industrial ecosystem. For investors and general viewers, today's briefing underscores several critical themes shaping Korea's economic trajectory. First, the government is simultaneously pursuing growth-oriented fiscal expansion while managing legitimate debt sustainability concerns, a balancing act that will define policy throughout this year. Second, the external environment remains volatile due to Middle East tensions and oil price dynamics, necessitating adaptive support mechanisms for exporters. Third, Korea's manufacturing and technology companies are strategically diversifying their geographic footprint, particularly toward India and Southeast Asia, reducing dependency on traditional markets. Fourth, the stock market's strength reflects confidence in semiconductor and technology sectors despite macroeconomic headwinds. Finally, structural adjustments in real estate and energy sectors suggest that Korean companies are positioning themselves for the green energy transition and digital transformation, essential for long-term competitiveness in an increasingly AI-driven global economy. This has been your Korean Economic News Briefing for April 21, 2026.